Welcome to Trading Lounge and the US indices. We'll look at the S&P, the Nasdaq, and Amazon. I think maybe Google as well. But look, for the S&P 500 here, we just need to be a little bit careful here. And the reason for that, and this is why I need to bring in the Nasdaq as well, is that we've got this as wave 3 here and wave 4 here, and looking for wave 5 to the upside. So far we've been on track with this and everything is fine. But I would expect that wave 3 here to have a larger impulse wave here to take us, sort of higher, up here, and not so much of a deep retracement as this as well. It's still okay. It hasn't really overlapped wave 1 here, but it's possible that if we just take a bit of liberty here for a moment and put this wave 4 over here and look at this here as an A wave here, a B wave up here, and a C wave over here. So if this is breached here, if this moves back down below the 72 here and becomes the retested resistance here, then you'll need to be on the short side, because we'll be looking to come down it'll be a flat correction, so we'd come back down into this space before moving up here again. And we'll be looking at 5 waves coming down through here. So it's possible that this could be wave 3 here, and then an A wave, a B wave, and a C wave over here. So I'm just going to put these back as I had them here, and then we just need to talk about strategy a little bit here as well. So I'll just copy this one here and put this here and dull that out there. And so so a B wave here and a C wave here. So if you're going to go long here, okay, make sure that you've got this number here as the 2580 as a nice tested support. Okay, so that's important to have that there, because any move above here to take out this high here would be would turn around and make that a corrective move down here. It's probably right, and we'll probably go straight up through here, but I just need to point this out. If that 72 becomes a retested resistance, then we can move to the lower side there. So I'll just go into see what I've done on the tick chart here. At this stage here, I've got it as an A wave, a B wave, and a C wave here. But it could also be counted as down for 1, 2, and 3, and 4 here, and 5 to this point, then an A and a B and a C here. So really, you do need to get up onto this space here before going long on that 2580. Okay, so if I go back to here and consider this wave 3 over here, and then have a look at the Nasdaq here. Bear with me here. See, I've got the Nasdaq. I've got the Nasdaq. I'm just going to put this here. I've got 2 4s there. I'm just going to put this into when I grey them out, that means they're an alternative count. Here I've got wave 4 here, and we've always looked at this as 1, 2, 3, 4, 5 for 1 here, back for 2 here, and then it's a little bit messy, all of this, but we pretty much stayed with it, and we got it right, and basically looking for 1 and 2 and 3, ABC for 4, and then up for 5 here. So we've got, since the last time we've spoke, we've got that break here, and so we're looking for this wave 4 here now, then wave 5 up, and I kind of always like this count. And then I could bring, as I mentioned, last time we spoke as well, we were looking at Amazon, and this is just the tick chart here, but with Amazon from the low down here, we could count a very clear 5 waves up here. And as I mentioned to you with this as well when we were speaking, that this was a really nice ABC correction down here with 5 waves in it here for wave 2, pulling right into the 61.8%. And then we could also, just to confirm that we're going to the upside, we see that we had 1 and 2 and 3 and 4 and 5 here for wave 1, and then an A wave, a nice B wave, and a C wave here. So we put this here as the trigger to go to the upside of a third, because a third wave moves strongly, but when you've got wave 2 and wave 2, and then we'll also have a 2 in here, we also have the third of the third of the third in here, they can move quite quickly. But the main point that I wanted to put here is that we've got wave 1 here and wave 2 here, and then we've got this nice 1, 2, 3, 4, and 5 up here for the third wave. So we're looking for the fourth wave here now, you know. So if I can just copy that here. Oops. The bracket on the side here means that it's actually circled this number here. It's a minute degree structure. So because some of them are in brackets like this one here, and that's fine, but a half circle just means that it's actually a full circle. But yeah, so in a bit of a nutshell here, the standard thing to do would be to take that here and look for a 38.2% retracement level, or the wave 4 of 1 lesser degree. So it's possible for this to, there's the wave 4. When you've got a sort of a parabolic sort of move like this here, we can normally, instead of taking the bottom here, we can normally take the top here and then the 38.2%. So it's possible for this market to move all the way down through to here. At the same time, we can, if you're chasing the market, we can put a signal above here now, because any move above here would make this corrective here. So we can still go long here, and also just to clear this out a bit here. Yeah, so with this here, of course, we've got this a major level here of 1000, and then the 1100 is a minor level the next degree down, and then these are sub levels here, so 10, 20 and 30, 1, 2 and 3 here, they make up group 1. Then we've got the midpoint here, 5, the second strongest number. This is where your other setup would have been under here, because we have the arrival, the reaction, first high above the level, and then the corrective move here. So this is a classic trading levels pattern number 2, the first variation of the first one. And then we move up into group 2 here. So group 2 is 65, 72 and 80. And then up here we start again here. So we've got the same as we've got here, 1, 2 and 3. So we've got 10, 20 and 30 here. So normally we would just expect the correction to play out in this space here, in this group 2 space here. That group 2 and group 1. Group 1 acts as the resistance and group 2 will act as the support. This is the space that the correction would unfold, and really it's a correction all about the 1100 here, and one strongest number in the market is 1, so we've got 1000 and we've also got 100 here. So this is a strong number, so we can a sticky number, so we can expect the market to be there. Once again, in terms of corrections, we've got the arrival, the reaction, the first high above the level. So now we're in the corrective phase here. So really this should, in first instance, the safe trade would be up here. So there is a risk in taking this one out. It still could fail. And the other point here too is that being group 1 here, if that becomes the support, then you know that the market is leaving this large number here. So that's always the catalyst for going further to the upside. And of course we've got the midpoint again, then we've got 65, 72 and so on up there. And Google will be the same as well. We haven't labeled Google Alphabet, but it's the same. You know, because we could see it so clearly on the Amazon one, we could see it here. So wave 1 back for wave 2. So we had our entry point here, and then the third wave came in, the fourth wave back, and then the fifth wave moving up here. So yeah, this is just in the bigger picture, this is retesting the 1000 here as well here. And once again, we can also put the levels in here as well. So 1 Fibonacci numbers, so 2 and 3 here, and then 5 here, and 65 here, part of group 2, 72 roughly, and 80 here, and then 5,100 here. So we can see that Google's basically lagging Amazon there. So if this group 1 here, I'll just copy that. If that becomes the tested support there, the top 30 there, if that becomes a tested support, that's where you go long from. Because otherwise, this number here has got this, can pull it back down from here. And the other point that you need to just be aware of too when you're looking at these things is just the 50-60% retracement level here as well. So that comes in quite nicely here. I'm just sort of shooting the breeze on. So that there. So the market can come up to here. So even though that I've got a signal here to go long here, then it's it still needs to. If this is the market here going up to group 1, it will react here, then go here, then have a first high above the level, then it'll have a corrective pattern coming into play, and that's when you put this here on top here. And once you've got that first one there, then you can always bring it down to the second one here to go in. But you do need that number as tested support there. And if that gets triggered to the upside, well, then you're away at that point there. So you're looking for a setup on that level. That's telling you that support on number 3 is telling you that the market is not being pulled by the closest, largest number and will move to the upside from that point. But anything under that is risk, because it does appear that you could even, I'd have to spend a bit of time on this, but it does appear like 1 and 2, and then 1, 2, 3, 4, 5 for the third wave here, 4th and a 5th. So it does appear that we can come down here, back to this space, and then down again. I can't draw past the price here. So it does look like an A wave, a B wave that can come back up to this space and then fail and move back down to here before moving off further as that wave falls. So just be a little bit mindful of that. Okay, I'll just leave it at that. Cheers.